everyone, I'm attorney Aiden Durham with 180 Law Co. in Colorado. Happy New Year and welcome back to All Up in Your Business. In this episode of All Up in Your Business, I'm going to tell you guys the one thing that you can do right now that can save you and your business thousands of dollars in taxes in 2021 and beyond. Before we dive into it, I would really appreciate it if you would click that little thumbs up button to like this video, subscribe to my channel if you haven't already, and share this video with everybody you know. And be sure to check the description for links to additional information and resources. And while you're there, check out my channel memberships as well. I'm going to be posting a very special members only how-to video as a follow-up to this video. That one's only going to be available for my channel members, so sign up now so you don't miss it. All right, so what is the one thing that you can do to save your business money on taxes this year? The answer is S Corporation. All right, that's all for this episode. Thanks for watching. Bye. Just kidding. But no, seriously, electing to have your business taxed as an S Corporation can dramatically reduce your overall tax bill as a business owner. Let me explain. There are 4 different types of tax classifications that commonly apply to businesses. They are sole proprietorship, partnership, S corporation, and C corporation. If you operate a business as a sole proprietorship or as a single member LLC, you will by default be taxed as a sole proprietor. If you operate as a partnership or multiple member LLC, by default you'll be taxed as a partnership. In those instances, the IRS basically treats it as if the LLC doesn't exist. The business's income is treated as personal income to the individual business owner or owners. And business owners have to pay self-employment taxes on their income. Since we're not employees, we don't have payroll taxes withheld from our paychecks. So the IRS instead, they take their cut in the form of self-employment tax, which is about 15%. So if the business's income is, let's say, $100,000, for example, that means the business owner will be paying approximately $15,000 just in self-employment taxes alone. And remember, we also have to pay ordinary income tax on that income as well. So all of that income will be subject to self-employment taxes and ordinary income tax. But many businesses have the option of changing that by electing instead to be taxed as an S corporation. It's important to keep in mind that this doesn't change the actual structure of your business entity. You can have an LLC that's taxed as an S corporation. It's still legally recognized as an LLC, it's just taxed as an S corp. You're not actually converting or changing your LLC into a corporation. When you elect to be taxed as an S corp, you become an employee of your business in addition to being the owner. You pay yourself a salary as an employee, and only that salary will be subject to those additional self-employment taxes. The remainder will only be subject to ordinary income tax. So again, if the business's income is $100,000, let's say the business owner takes a salary of $50,000. That 15% self-employment tax only applies to the salary. So it would be $7,500 in self-employment taxes as opposed to $15,000 in that first example. So now you may hear that and think to yourself, well, why wouldn't every business just be taxed as an S corp? Obviously, it can save you quite a bit of money, so why wouldn't everybody do this? Well, first off, only business entities can be taxed as S corporations, meaning that you're not eligible for it if you operate your business as a sole proprietorship or a general partnership. Sole proprietorships and partnerships aren't legally recognized business entities. From the legal perspective, the individual owners are the business. So if you're considering making an S corp election to save on taxes, you first need to form an LLC or a corporation for your business if you haven't already done so. You do this by filing articles of organization or incorporation with the Secretary of State's office. Once you form the company, you'll want to apply for an EIN or an employer identification number through the IRS at irs.gov. And you'll also want to prepare, or better yet, have a lawyer prepare the operating agreement or bylaws for the company. Then once the LLC or corporation is all set up, you can make that S-Corp filing election. Check the description because I have a handy tool available on my website that allows you to quickly and easily form an LLC online in any state. The IRS also has some rules when it comes to being taxed as an S corporation. For example, S corps can't have more than 100 shareholders, they can't have more than one class of stock, and the shareholders all have to be residents or citizens of the United States. So not every business is eligible for the S corp election. There are also some deadlines for when you can elect to be taxed as an S corp. When you first start a business, you have 2.5 months to make the S corp election for it to be effective for that tax year moving forward. If you don't make the initial election at that point, then you have 2.5 months from the beginning of each year to make the election for it to be effective from that year forward. If you want to take advantage of the potential tax savings of the S corp for 2021, the election must be made by March 15th, 2021. So let's say you started a business last year in 2020 as a single member LLC and you did not make that S corp election initially. That means you'll be taxed as a sole proprietor when you file your 2020 tax returns, and you have until March 15th to make the election for it to be effective for all of 2021. Let's say you've been operating your business as a sole proprietorship and now you want to be taxed as an S corp. Like I said earlier, you first need to form an LLC or a corporation with the Secretary of State. Then you'll have 2.5 months from that date, whatever date your LLC or corporation was officially formed, to make the S corp election effective as of that date. Otherwise, you can file the election later. It won't be effective until the following tax year. You only need to make the tax election once. You don't have to do it every year. If you elect to be taxed as an S corp in 2021, that will continue into 2022 and beyond until or unless you change the tax classification to something else. You can make the S corp election by filing Form 2553 with the IRS. As I mentioned in the beginning of this video, I'm going to do a follow-up members only video where I will explain exactly how to complete the form and specifically what must be on the form for the IRS to accept your tax election. So make sure you're a channel member if you want more info on how to elect to be taxed as an S corporation. While the S corp election can potentially save you a lot of money in taxes, it's not always going to be beneficial for every business owner. The tax filings are a bit more complicated with an S corp, and because of that, I always recommend that you work closely with a CPA or tax advisor. So you kind of need to assess if the tax savings will be worth the additional costs involved. If you're going to save $1,000 in taxes, but you're paying your CPA $2,000 as a result, then, maybe the S corp election doesn't make sense for you right now. So it's always best to speak with an attorney or a tax professional before making any changes to your business to make sure it's the right move for you. That's all for this episode, folks. Drop a comment below, let me know what you think, and don't forget to check the description for links to additional information and resources, including my online tool for forming an LLC in any state, and check out my channel membership so you don't miss the exclusive members only video where I will walk you through the process of how to actually complete and submit the form to the IRS to elect to be taxed as an S corp. Thank you all so much for watching. I'm Aiden Durham, and I'll see you next time.